We're 2 hours into trading. It is Tuesday, June 29th. Hello, traders. I don't try to gain your trust by showing you some cherry-picked P&L. I show you real, actionable trades each and every day, and I start each video off with my pick from the previous day so that you can get a feel for the track record. This is a systematic approach that can be learned, it can be replicated, and over time, you're going to see that it works. Yesterday's pick, Microsoft. I loved this breakout through horizontal resistance on the daily chart and the fact that the stock had really nice follow through. We were seeing relative strength yesterday, and we'll put up the 5-minute chart. You can see the stock didn't do a whole lot. This is about where the video came out. Yes, it closed a little bit higher than where the video came out, but today you can see how it's continuing to march higher in a flat market. Not much of anything going on. So yes, I still like Microsoft. It's a nice pick. It's not a huge fast mover, but it is a nice steady grinder. Let's take a look at the market right now and see what it is telling us. 1, 2, 3, 4, 5 support levels right here on the low of the day. We've got a little gap that needs to be filled in right here, and I believe that we are going to fill that gap in because you can see that this is where people would be buying and their sell stops would be just below that price. So it's natural for the programs to come in and try and shake them out. Now here's the clue. If you see a long red candle and then an instant bullish engulfing candle after we fill in that gap, then we're probably just going to float right back into the trading range and chop around. This is a pre-holiday environment. We've got the 4th of July holiday next Monday. You're going to see volume really dry up. There's not a lot of news to drive the market right now. We don't have a lot of economic news. Earnings season is behind us. The Fed is not really doing anything. They won't be raising rates until late in 2023, so there's nothing to really drive the market right now. So that favors the current momentum, which is up. Light volume rallies are dangerous because those gains can very quickly and very easily be stripped away. So this is a time to tread cautiously. So if you see a long red candle and then there's follow through, then we could see some continuation to the downside. Not really looking for that. The bid has been very strong. We go into the daily chart. You can see how we've broken through this horizontal resistance. We only had 2 days of selling and then boom, off to the races. That 50-day moving average has been a nice support level. Every time we've tested it, I've got a little alert here, Baidu. Not going to take a look at that right now. That was a pick from a couple of days ago. But in any event, we touched that 50-day moving average and then zoom off to the races. But look at these candles. These are telling you something. Tiny little bodied candles. Very low volume right now on the SPY. So be careful. This is not a time to go spreading your wings and to be thinking, my God, we have a beautiful market breakout. I'm going to go buy Microsoft and every other tech stock because we're going higher. Well, we may continue to drift higher, but moves like this are very common when you get tight little tiny compressions like this on light volume. And then whoosh, the next thing you know, you've got a nice basket of positions. You turn on your screen one morning and the S&P futures are down 40 points. Devastating to call buyers, also problematic for out of the money bullish put spread sellers because you have to go close to the money to get any decent kind of credit. And the next thing you know, wham, your positions are all in the money and you're having to adjust. So it's a good time on a swing basis to really not be doing a whole lot of anything. If you're day trading, it's the best of all worlds because we're seeing a lot of sector rotation from group to group. So if you're in a stock like Microsoft and you have a nice gain throughout the course of the day yesterday and you feel that you might have some follow through buying the next day because the market finished strong and the stock finished strong, take some of your profits and hold a little bit of it overnight and then look to scale out the next day. That's how you should be playing the market right now. So let's go into our search. Let's find a stock for today and then let's call it a day. I'm going to flip through a few different charts. I'm just going to go into my heavy buying list, mRNA. This is very nice. Going to put that 5-minute chart back up of the S&P 500. Notice I never, ever take my eye off of the market, ever. I'm comparing what the stock is doing on a 5-minute basis, tick by tick. So I have this S&P 500 chart tucked right behind my primary chart, and you can see, just as I said, we're going to come in, we're going to test this low of the day, probably fill in this gap. We'll be watching that red candle to see if we get follow through. We have a bearish 10p cross right now, so traders in the chat room should be very, very cautious in here. Before I started recording, it's exactly what I mentioned. We're going to go through this list. mRNA is a good example. Now that we have some market weakness, you can see drifted off the high. What has the stock done? Compressing. That tells me that it wants to go higher. Put up the daily chart. Beautiful little breakout right here. Tails above body. What does that tell you? It tells you that every time the stock tried to break out, wham, 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 there's a seller there or a group of sellers. There's resistance building. Now, we've just cleared out those sellers and the stock actually has a chance to run. mRNA looks really, really good. It's been my pick of the day recently, so I'm going to be looking elsewhere, but I really like mRNA coin. Fantastic. You can see how it's getting some resistance at the 50-day moving average. This is a bottom fisher, but it's formed a longer term base, so I don't mind coming in and buying these when they have big volume and breakouts through horizontal resistance and through major moving averages. I bought coin yesterday, I held it overnight, and I took profits on the open this morning. I would not want to be hanging on to this stock long term because it has been so weak. And right now you're seeing a lot of these stocks, cryptocurrency stocks, Chinese stocks, all the laggards are starting to run higher and they're getting these big pops. If you're trading any of those are the stocks that you do not want to swing trade because they can quickly reverse. They are weak and they have been weak. So you know that there are sellers. The stocks that you want to focus on are the ones that are making nice moves higher. GS, pretty nice. You can see a nice run up here. Got a bullish flag formation right in here, downward sloping trend line. Stock is moving higher today, 50-day moving average. So this is good. Yes, I think bank stocks could be nice. Now that's the type of stock that you want to be buying. But Pete, the stock is already up so much. Look at this big breakout right here. I can't buy this stock. I feel like it's too expensive. Well, I'll tell you, that mentality would get you into trouble with any of the stocks that are high flyers right now. At one point, you wouldn't have bought Apple, you wouldn't have bought Google, you wouldn't have bought Facebook, you wouldn't have bought Tesla. You'd be on the sidelines waiting for that perfect entry point that never comes while the stock screams higher. Now, Nike is an apparel maker. They're not going to scream higher. Lots of choppy price action in here all day long. But I do like Nike. I think that it's been able to hold this gap up very nicely and it's continuing to follow through. So selling an out of the money bullish put spread on Nike down around that 150 level would work on the notion that this support is going to hold. And it certainly looks like it will to me. But that's also not going to be my pick of the day. I'm going to continue to go down. I like FDX if it can get through the 50-day moving average. Pretty choppy, nice trend higher. Got your downtrend line there. Click GTC, click on that candle there, click on that candle there. Now I've got my downtrend alert line set. MS, Morgan Stanley, same as Goldman Sachs, nice chart. This looks pretty good, but you can see I've got my alert drawn. I want that stock to be through that horizontal resistance point right there, and then I will be looking to enter that trade AMD. I like AMD. You can see really nice support here, horizontal support, nice upward sloping trend line through the major moving averages, decent volume coming in, downward sloping trend line, breach to the upside, horizontal resistance, breached to the upside. Let's go into that 5-minute chart. Market down, 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 stock started to pull back, a little bit of profit taking after a nice run, and then boom, right back at it. This stock has buyers. AMD can be a little bit choppy, so buying dips is the way to go. AMD, that's your pick of the day. Look at the volume. Go into a 30-minute chart. Look at that volume. Beautiful volume. Okay, so this is a nice little volume spike in an otherwise quiet market. And it is the counterpart to NVIDIA. Also, a GPU maker. Look at what NVIDIA has done. So yes, I like AMD. I think AMD is lagging a bit, but I think that it has plenty of room to run. Again, the technicals look really good to me. If you are wanting to play it somewhat conservatively, then you can draw your upward sloping trend line here visually. Comes into play right around that 200-day moving average. So you'd be looking to sell an out of the money bullish put spread keying off of that $84 price point. You're only $4.50 out of the money or so, so you should be able to get a decent credit. Check the earnings date, July 27th, so you've got plenty of option expirations before then that you can use to sell out of the money bullish put spreads. Be very careful in this market right now. This is not a high probability trading environment. The worst thing that you can do is to try and force trades right now and to piss away your hard-earned money, because when the good times come, and they will come, you're going to wish that you had that capital that you pissed away when the market was just kind of chopping around back and forth. I believe that the bid is going to strengthen probably in 2 weeks or so as we get closer to earnings season. We do have window dressing. It's the end of the quarter. I believe that's going to have a very, very slightly negative bias to the market. And when I'm mentioning things like that, you know that there's nothing else to drive the market, because normally that would not even be something that I need to mention. I think that bullish speculation is very hot right now. So I'm not looking for a big market drop, but I'm looking for intraday moves where the market gaps up and then fills in the gap, gaps up, fills in the gap. So constant bid checks to kind of keep the bullish speculators honest, just like we did yesterday. Opening gap higher, and I'll say this because it's a very important point. Opening gaps higher to a new relative high, you should not aggressively buy the open, because the chances for a gap and go pattern in a very light volume market are minimal. Your best bet is to let the bid check run its course, wait for those support. We have multiple support. We have a higher low double bottom. Okay, this might be a point right in here to come in and start nibbling. There we go. Got another drop. Now we made a new low of the day. If you're trading relative strength and you buy in here, obviously you'd want to start taking some profits along the way in a quiet market. But if you didn't and the market continued to pull back, your stocks should have held up well and you should have been able to weather that storm. Downward sloping trend line, breakout to the upside, goodbye. So early morning, gap higher. You need to temper your excitement, because this is not a go-go runaway market that will never give you another chance to get long. No. This is a market where you have to be extremely patient. You have to wait for your entry points, be patient, be disciplined. And once you're confident that market support is in, you get that low of the day, you get that downward sloping trend line, breach to the upside, bullish 10P cross. This is your entry point for the stocks that you've been watching for. This market right here, we want to see if that low holds. We'd like to see a bullish 10P cross in here. You'd also like to see this downward sloping trend line on the SPY breach to the upside. So as long as that trend line is intact, you should not be out there aggressively buying strong stocks. And some of these flyers, like SPCE, this stock is coming back into orbit. Look at how high it ran, and look at that sharp reversal. This is a short that I'm currently in, and it's working beautifully. That's all I've got for you today. Tread cautiously, be patient, don't waste your capital in this low probability trading environment. Favor the upside, but wait for those opportunities. Watch for sector rotation. Pick the hot groups, stick with the stock picks that I show you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.